Good morning, everybody, and welcome to Tuesday, June 18th. As we head into yesterday was a little green, but before Dave and I get started again, I want to remind you of our free report that we have coming up for this week or so on retirement strategies. Here's the deal. It's there's no do-overs when it comes to retirement, and so we want to make sure you're on the right path to retirement. And so we've put together a free report called Retirement Strategies. All you have to do to get your free copy is text the word retirement to 863-285-3815. That's right. Just text the word retirement to 863-285-3815 to get your free report. Hey, Dave will be with us in just a moment.
Jim, the ever manly boy George and company there. It's Culture Club. Good morning. It's 8:30. Holy crud, I'm early. 8:38 now. It's 22 before 9. Time to check in on money and find out how Wall Street's doing this morning. What are they doing with your money today? Let's go downtown Sebring to the offices of Statler Financial Services. Phillip Statler standing by in them. We've been saying all along, market mover of the week, Phillip, probably is going to be the Federal Reserve meeting, and looking at the modest moves we had yesterday, it looks like that prediction's kind of holding out, isn't it?
Well, yeah, yesterday was, you could say, a lackluster day, to say the least, but it ended in the green. I mean, I got to think whenever we can end in the green, that's a positive, but just not much.
Oh, absolutely. I'll take green any day of the week, but we're talking about, 0.09% moves in the Dow, and the big mover of the day was the NASDAQ up 0.62%. Yeah, it was, we're kind of waiting to see what's going to go on toward the end of the week, aren't we?
I think so. I mean, we got the Fed coming out tomorrow, the meeting minutes there. We have, first-time unemployment claims really coming out on Thursday. And you know what? Other than that, there's not much else coming out, Dave.
It is going to be a macro-driven week without a doubt. Just a sidelight, nothing more. We were talking about this yesterday. Big air show and convention over in Europe, in which they were expecting Boeing to be able to make some sort of an announcement that might help their stock a bit because of plane sales and whatnot. It's basically Airbus and Boeing going head to head. The big news out of it was Amazon says, "Hey, we'll take 15 737s." Kind of adds a new dimension to Prime, doesn't it?
It does. Now, that was yesterday, right? But they did land their first order, I guess, this morning or today. I'm not sure where it is over there right now. But Korean Air, I guess, has put a provisional order in for like 20 of the 787 Dreamliners. And then they got another order to lease another 10. So,
and in reality, yeah, I was going to say, in reality, I mean, this is a kerfuffle on that plane. It's been a disaster for Boeing, but it's reparable. What they really have to fix, more than the planes, is their own reputation, with those stories leaking out of Boeing about how they knew there was a problem with the guidance system and chose not to do anything about it. Worse yet, made it an extra cost add-on to fix it. They got reputation issues more than they have airplane issues at this point.
yeah, they're gonna have to hire a good PR firm to fix their stuff there. But hey, let's kind of look at that compared to what Airbus did. Airbus ended up with 123 jet order and options
Wow.
in 2 days. So a pretty big contrast there.
And there ain't much doubt that the Boeing PR problems made that ratio of sales probably look even worse than it was, right?
Yeah, exactly.
Without a doubt. The other big item going on at the moment is we got housing starts out, building permits issued, and I gather that for a change was a pleasant surprise, huh?
It was. We expected about 1.24 rounded up a little bit of new home starts, and we came in at 1.27 rounded up. So that was kind of unexpected and a big pleasant surprise from last month too.
Absolutely. We talk about housing being so darn important to the economy, and it kind of hits home here since that last recession was so driven, especially around here, by the crash in real estate values. Seeing building permits actually being a pleasant surprise is a nice change, because we haven't had a lot of good news on the real estate front for the last few months.
No, we haven't, and but we can add to that now, Dave. I'm sure mortgage rates are going to continue to fall as we look at interest rates. The 10 years dropped to the lowest it's been since September of 2017, down to 2.03%, ahead of what the Fed's going to do today and tomorrow.
And I
And
know I was going to say, I noticed the 30-year rate as well was down by a full 5 basis points this morning as well. And that tends to drive the mortgage rates down even more as you start looking at long-term money, even getting cheap.
exactly, because I mean, the 30 years at 2.5 and some change. So yeah, expect mortgage rates to continue to fall at that rate.
And that may very well increase the number of refinances coming up as well as we start getting mortgage rates down almost as low as they were a couple of years ago when so many of us refinanced.
Yeah, exactly. And I got this little headline now that says traders are now pricing in more than an 80% chance of a rate cut in July and a 70% probability of another reduction in September. That's pretty astonishing right now, given that I don't know that we really look like we're in that bad of shape. I mean, yes, we're slowing down, but I don't know that the Fed cutting rates is really the best solution. Uh, I mean, just to keep the business cycle going, we know, you and I have talked. The business cycle is the business cycle, and we are going to hit that contraction mode at some point, which is going to be recessionary. And so, sometimes I think it's better to get it done and get it over with, so we can get out of it quicker.
Well, you add to the other side of the fence, too. If the Fed uses up all the arrows in its quiver before we're starting to look at being in a recession, they're going to have a darned hard time being able to give us the soft landing we all hope for during a recessionary contraction as well. One interest rate reduction next month, that looks possibly wise given the difficulty the tariff war is going to have. But if we look at two, one of my columnists I was reading, I found kind of interesting that if the Fed were to panic and reduce interest rates at this meeting tomorrow afternoon when they make the announcement, that might actually be bad news merely on the grounds that it communicates to the stock market that the Federal Reserve governors know something we don't know, and they're saying, whoa, head for the hills, we're in trouble already. That could cause a panic on that level, even though it'd be good news short term.
I think you're probably right, Dave. I mean, I think that is a case of, could raise some panic within the marketplace if they go to lowering interest rates. I mean, we're seeing that the treasuries drop themselves, which is a flight to safety, which is okay. I mean, that's just a common thing that people do. But for the Fed to come in and justify some of that could be problematic in the markets and in the economy.
Absolutely. Right. Might help at this point in time to harken back to what went on during the '09 recession. The Fed dropped interest rates all the way down as far as they could, and they got to the point where they were running out of tools, and they found themselves buying up every mortgage in sight in an effort to try to loosen up the money supply. There's a limited number of things the Federal Reserve can do. So we start reducing interest rates too fast in an effort to regenerate a boom that really isn't there. Like I said, we're going to run out of arrows in the quiver too early.
Yes, and as you and I talked, the 10-year continues to fall to 2.029. Now it's below 2.03.
Wow, I'm waiting tomorrow morning to see it down under 2 on the 10-year, and that'll be almost to the point of being scary, won't it?
It will, and you think about that, and add on, the Fed lowering interest rates. I just don't think that's a good formula.
Probably not. There's some expectation there. Like I said, it communicates they know more than we do. So tomorrow's 2 p.m. announcement from the Fed is probably going to carry a lot more weight than it would otherwise. Setting the table this morning, like we mentioned, it was a modest up day, but nevertheless an up day yesterday. Dow was up by 23. NASDAQ was up by about 48, and the Standard & Poor's was up by 2.5. Green beats red any day of the week, but it was an underreactive day, for lack of a better term. 45 minutes before we open this morning, Phillip, there's a lot of upset in the world, but not a lot of economic news. Which way are we heading this morning?
Hey, we're getting a pretty good bounce right now, Dave. The Dow's up a little over 0.5% at $142. The S&P's up 0.6% or $17.45. The Nasdaq's up a little over 1%, $80.25. We've got gold, the highest we've seen it in 14 months, up another 1% to $1,356.80 an ounce. Silver's up 1%, but still can't get over that 15. It's at $14.98 an ounce. We've got crude oil heading up 0.5% to $52.22 a barrel.
Memory serves, that's about where it was yesterday morning, though. We're kind of flipping around back and forth and staying in that $52 range, aren't we?
Yeah, we are. We seem to be.
I think so. By and large, world markets are in pretty good shape this morning. Europe is up midway through their trading day. Asian rim markets, for the most part, were up. Japan was off substantially at the close this morning. I think that's because my priest is on vacation over there and he's just not buying enough fast food. That would have to be what's doing it to Japan this morning. Somebody want to figure out how to react to all of the stimulus coming in. And the stimulus coming in these days economically is just flat out weird. How do I find you on the phone, Phillip?
Hey, Dave, they can give us a call. We've got actually a free report. You know, retirement is kind of a one and done deal. You need to make sure you get it right the first time because do-overs aren't really very good. So text the word retirement to 863-285-3815 to get your free report. To get a risk analysis of your current portfolio and our x-ray report, call us at 382-0037 to schedule that analysis. Follow us on Facebook at Statler Financial Services, and then join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
And streaming on newstalk730am.com. Let's give them that cell phone number one more time. Text retirement to 285-3815 for some information that you might just find vital. Phillip, thank you so much. I look forward to catching you tomorrow, and let's see what goes on with the Fed. Fair enough?
Fair enough, man. You have a great day, and I look forward to tomorrow.
You too, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Who will be